Good day, Keith Travis. Today is September 30th, Tuesday, and boy, I'm glad the cooler heads have prevailed in the market. Right now, we've seen a peak almost all the way to 400 basis or 400 points back in the Dow, erasing nearly 400 of the 778 that we lost yesterday. So there is some common sense being used today, thank goodness. I was a little concerned last night when I went to sleep that the foreign markets would completely shut down, and we'd have a panic here this morning, almost as bad as yesterday. But I think there's enough speculation and hope that the House of Representatives really will come through with this vote, this package, this rescue plan to stabilize the markets. Again, it's a rescue plan. It's not a bailout plan. I hope people start to get this soon and realize the impact of what this is going to do. When the government can go into AIG, a $1 trillion company, and buy 80 or get 80% of their stock on that bailout, that means if buy it on 15 cents on the dollar, they can come back and if it comes back 50%, they're going to be able to see huge profit. So again, this money is being injected into the economy, but it could be a huge moneymaker for the government in the end. Right now, mortgage-backed securities, unfortunately, are down, which would affect your interest rate, like I've talked about. We're almost down 50 basis points. I just got an alert to lock. So if you're out there floating, I would recommend locking because people are getting some bargain basement deals right now. When things like Apple and Google drop several-year lows yesterday, when they're not even involved in this financial mess, but when that's the knee-jerk reaction and the fear taking place, a huge sell-off of Apple. I mean, we've got iPhones and iTunes and all the different iPods and things, and it's been a hot stock for several months now. And to see a huge decline in their value, it just goes to show that people sometimes get in the market for short-term investment strategies, and it's never the right plan to get into the market on a short-term whim. It's always a long-term strategy. So today, some people that are smart are getting some great deals right now. Again, pulling money out of mortgage-backed securities, out of treasuries. Treasuries are down huge today. They got a huge influx of money coming in yesterday because it was government-backed U.S. securities or U.S. treasuries, and it was one of the safe things they could invest into. But money's just flowing out of there today back into stocks because when you can get Apple 80 cents on the dollar, it's a pretty good deal. So unfortunately, a lot of us don't have money, and we can't be playing in the game right now. But those that do have money, as they say, there's blood in the streets. It's time to make some money. Other things that happened today. Consumer confidence, of all things, was higher than expected. It may not be the case next month after this fiasco, but right now the consumer confidence came in a lot hotter than expected, which is positive for the economy. And then as far as just increasing spending for retail and those type of things, and going back into getting cash flow moving in the economy. Also, the Chicago PMI, which is the Production Managers Index, it basically is a encapsulation or a survey of all the manufacturing going on in the Chicago area in that district of big ticket items, as far as has their production slowed and job loss, or has it gained higher production and more jobs. And right now the numbers came in hotter than expected too. So that's real positive news. The dollar is on a huge rally against foreign currencies, which is ironic about this whole thing is that before, back in the crash of '87, we were not a global economy. We're coming out of the Cold War. When our market, Wall Street, crashed in '87, it affected the U.S., not so much in foreign economies. Now we are such a global economy with so much money invested into our markets, we have caused a domino effect around the world. So I don't know how you look at that. I guess it's kind of sick to think we've caused so many problems for everyone else, but it does cause us some comfort that we're not the only country struggling right now. Last night, for example, the London Interbank Offered Rate, which is the LIBOR, most ARM indexes, or most ARMs use as an index to use adjustable rate mortgages, that typically hovers between 3/4 to 1.5% above the Fed funds rate. The Fed funds rate is 2% right now. So usually the LIBOR hovers within a 1% of that. It has been around upper 2s, close to 3. It did a 400 basis point jump last night, meaning a 4% jump last night. So banks yesterday could borrow money from each other at about 2.87%. Last night they could borrow money from each other at 6.87%. So wow, talk about money being on hold. Who wants to borrow money at 6.75 when the day before they could have got it 4% lower? So everybody's frozen right now. Nobody wants to lend to each other. So again, I think it would have been worse. China is cautiously optimistic right now, hoping that our government will step in and really let this pass this bill through to get it stabilized and money back flowed into our economy. So that's kind of the update today. Like I said, I just got the alert to lock, so unfortunately we're taking a little bit of a pounding on the chin for mortgage-backed securities today. But lock in if you can, and then tomorrow we're probably going to see a recovery. Right now is Rosh Hashanah, and so Jewish holiday. So the market, not the market, but the House of Representatives is shut down. Most likely someone will come back tomorrow and start working on this bill, revision of the bill, and Thursday hopefully we'll have a vote, most likely Friday. So I think a lot of people are in a hold pattern right now. So not a lot to anticipate or know even. So we're kind of on a holding pattern. Other than that, I think that's it for today. Oil's jumped back a little bit, but we're hovering right at $100 a barrel. So no real spike there. We did have a big drop-off yesterday with the uncertainty and things, but from here we may see more rally. If we can get back 500 points in one day on a Dow, boy, it sure makes that 778 yesterday not look so bad. So if you have any questions, give us a call. We look forward to serving you, and be blessed.